if the market is rigged to stay up at all-time highs, we're going to see a pullback. Obviously, the market has been on a tremendous run since COVID. We've had pullbacks, periodically, but right now it's back hovering around all-time highs.
Yeah.
So will we see a pullback in the market, or is this rigged to stay up at least until election time?
I always say that the market is rigged to stay up for a long period of time. That's with quantitative easing, with hedge fund buying, with robo investing in indexes and ETFs. I think this really applies more to traders who are looking for a pullback. But my thing is like, stop worrying about the election cycle. Stop worrying about a short-term cycle. Overall, the market is going to go up year over year. We'll talk about NVIDIA later, but even with indexes or ETFs, you should be able to get an easy 12 to 15% out of the market. So on the macro picture, yes, the market is rigged to stay up. Like people always ask, is the system rigged or the game's rigged? Like when Luka traveled on that step back three. Yes.
Alleged.
2 carries and 3 steps. I'm not a pro hooper, but if I take 3 steps back, that's a travel or no?
So no, you got this. They count the gather dribble.
Gather step.
The gather step. Yeah.
New rules. Shout to Kyrie though.
LeBron.
But no, like I think it's a mistake to worry about. Are we going to have a pullback? Because even in a deep recession, let's say you drop 50%, usually the return is 150 3 or 4 years later, and their recession low only lasts for maybe 5 or 6 weeks on average. So continue to hold for the long term. If you missed out, stop missing out. Been doing this for 4 years. Stop missing out. Like just said at the top of the show, we don't miss a Monday. I don't want you to miss a month investing. All the answers. Which ones? VOO, VTI, VUG, VGT, XLK, Apple, Microsoft, NVIDIA, AMD, Eli Lilly, Google, even though their Gemini is malfunctioning, Striker, and you're good. Over the long term.
Yeah, I think the simple answer is yes. If we look at the history of the market for the past 77 years, we've seen that. So historically, it tells us yes. But for every reason that you just said, you're talking about the Dow. I want to see where the year analyst had the Dow going to 40,000, right? As it's nearly approaching that.
Yep.
The NASDAQ is approaching 17,000. The S&P, I mean, most people had it at the end of the year going to 5,200. It's at 5,300 present day. And so is there a good time to invest? There's always the right time to invest is when you invest, right? Because again, we've seen this cycle. I always like to talk about the Market Mondays time as its own term, right? From 2021 when we started to present day, you've seen the ups and downs of the market. You've seen post pandemic that we had an incredible resurgence, right? And then you saw in 2022 we had a huge correction, especially when it comes to technology. And now here we are approaching just under 17,000. So is there a perfect time? No. The right time is when you actually execute. And so is it rigged to go up? Yes, because the economy is always rigged to go up. We've seen this historically, like I said, for the past 70 to 80 years. We don't see it changing, and things have been put in place. I know you talked about quantitative easing. Things have been put in place, interest rate. These things have been put in place to make sure that it is sustainable. So block out the noise when we're talking about investing. If you're talking about trading, there's going to be cycles, there's going to be volatility that comes with it. But if we're talking about long-term investing, which is the first thing that we stressed since day one, it is rigged to go up. Whether you're getting 5% or some grit on years like 2023, 30%.
Yeah.
It's going to be positive, right? When you average it out over the course of time, your majority of times you're going to be up.
It's the one industry that's rigged that you can take advantage of. In your favor. So if BlackRock and Vanguard owns it, check it out. You can also look at a site like finviz.com. Because I gave 3 tips last week. That's another one you can add to the portfolio. But the most important thing is not all the education, is what will you do with it and execute. Please buy. Like some of you have missed out on, if you put 10 grand in 2020, now you could probably have 200,000-300,000 if you want a conservative end. Stop missing. We're almost into a half of a decade. Preponderance of proof. Please buy for the long term. I'm sure it's the same conversation you had with Weezy and Alex going to the episode tomorrow, right? The non-quality podcast, Adam 22, shambles. The ones that are of high quality, network is doing fine, right? Like the ones who have great talent will find a way, the cream will rise to the top. You'll find a way to adjust, right? They have a bunch of great guests in their studio, Neil Britton, and the the cream will rise to the top. And I think in 2022, it pushed out a lot of bad companies, and you saw Uber emerge and Netflix go back to this resurgence, Paramount fall apart, Disney's
Meta
came back and shut me up and everybody else, right? The cream will rise to the top. Elon started doing cocaine because he was stressed. Tesla fell apart. Quality will rise over time. That's why if you focus on a 3-month period, you can have a lot of losses in that time period. If you focus over 3 or 5 years, you'll be A-okay. You'll be A-okay.
So what's your end of the year targets for the NASDAQ and S&P 500?
NASDAQ, we really could hit like 18.1 if we stay at this pace. Dow, I think definitely will stay above 40. We should hit maybe like 41,220. I think we should close above there and we'll be good. But going back to my major point and thesis of tonight is please hold for the long term. The short term noise, like, okay, think about this. The Brooklyn Nets at one point gave up on Kyrie because of his belief, which he was accurate about. And I remember them calling him a headache, a disaster. You guys had the conversation with Stephen A., which he's been lighter on Kyrie this year, which I appreciate. But them not keeping Kyrie has hurt their franchise, and he went to Dallas, and now he's thriving. Mark Cuban took a long-term approach into a once-in-a-lifetime player. I want you guys to do the same thing with this market. Don't make an emotional short-term decision over an investment when you need to take a long look to see what the outcome is going to be. And they're probably going to end up in the finals as a result.
But also the example with Kyrie and even Katie, shout out to both of them, is that it highlights the dangers of investing in individual stocks, right?
Oh, that's a good segue. You are good.
Because depending on where you got them, all right. So if you have KD in Golden State, 2-time champion,
yep,
it works out. If you have KD in Brooklyn, it doesn't work out.
Yep.
If you have KD in Phoenix, it doesn't work out. If you have Kyrie in Cleveland, works out. They went to the finals, I believe, 2 times, maybe 3.
Yep.
They won the NBA finals. If you have him in Boston, doesn't really work out. They didn't win any playoff game. If you have him in Brooklyn, it didn't work out. Now in Dallas it is working out. So what I'm saying is that, and like I said, no disrespect to them, but right, depending on where you have these players in their career, their circumstances, who their teammates are, who's the coach, the city that they're living in,
the
system that they're playing in, that's going to determine if you're going to have a championship run or if you're going to get knocked out in the first round of the playoffs, right? So it's like depending on where you invest in Apple, right? Yep. You could have seen 5,000% rate of return, or you could be currently down 30% on your investment if you invested at the high, let's say last year or whatever the high was, right? It's the same company, right? It's just depending on where you invested. Mm-hmm. Now, if you would have put $10 million in and now you're down 30%, well, now you're down $3 million.
That's a rough morning.
Right? So I think this speaks to the dangers of investing in individual stocks. This also speaks to not investing at highs unless you're dollar cost averaging. That's important. So yeah, it really does matter where you invest, even though nobody can really predict the market, but you don't want to put lump sums of money in. This is why you put small amounts of money in every single month, right? I think that's important to tell people, because it's like if somebody's just looking at it like, okay, the market's at an all-time high right now, Nvidia, let me just put $300,000 in Nvidia. No,
nope, don't do it.
It could potentially work out for you, or it may not, right? But in the theory of, hey, just get in where you fit in, right? You got to be careful with that, because now if you get in at the wrong time, it's going to take years.
It'd be a disaster
to break even. If you sometimes you might not ever break even. Who knows? Yeah. It might turn into IBM for anything can happen. So this is why index funds, right?
Yep.
ETF index funds are always safer than individual stocks, and this is why investing small amounts, and small amounts are relative. One person's small amount is $200, another person's small amount is $10,000 a month, right? That might be a small amount to a person, but whatever you're feeling comfortable with, right? As long as you can do that on a monthly basis, if you could put, okay, I'm gonna put $1,000 a month into the stock market every single month, right? That might be a lot for some people. That might be a small amount for some people, right? But it's like you're chipping away at it every single month, so you're not fully exposing yourself to, putting too much money in at the wrong time and then having to pay the consequences for that.
Yes. VOO, VTI, VUG, VGT are some ones you can invest in.